Freedom Chaser family, let's give it a warm, warm Freedom Chaser welcome to Keeley Hubbard.
Thank you.
DJ Khaled! Hey! DJ Khaled!
Welcome back.
Y'all are so awesome. This is like a party. I love y'all. I mean, I don't like to play favorites, but I think y'all are my favorite. This is a lot of fun.
Love
Thank
it.
you for having me.
That's quite a compliment.
Yeah.
You're very welcome. You're very welcome. I want to ask our audience, Keeley, really quick. I want to poll them. And if any of them were here last time we had you on, which maybe was about a year ago, maybe a little bit less, Keeley and I share a fun fact together. We have the same fun fact about our family history. If you remember that from last Zoom, put it in the chat. And if you don't know, just say, I don't know. But I'm curious if anybody remembers the fun fact Keeley and I share. Let's see. Don't remember. That's all right, Trevor. Yep, don't know. I wonder, Keeley. I don't know if we're going to have anybody. Iffy, do you remember the fun fact Keeley and I share?
Does it have anything to do with this country of Texas that I keep talking about? Seventh generation, maybe something along those lines?
Whoa, you got it. You got it. The co-host hit the nail on the head. Yep, that's right. Keeley and I both are seventh generation Texans, which means, I mean, Keeley, our family came and just conquered the wild, wild west.
Basically. Yeah. Basically, we own the state, you know. We're just obnoxious Texans. Hopefully we don't lose people tonight.
Yeah.
We won't keep talking about Texas, but we are those obnoxious Texans.
That's right. We'll tone it down a little bit. We'll tone it down for everybody. But Keeley, let's go ahead and jump into your background and why we're all here tonight. I'm really excited to have you. It's just really great to see you. Y'all, Keeley is just amazing. I mean, it's hard to do it justice as far as just the praise that we can give Keeley. We're thankful to have you on. And I think maybe, Keeley, it might be appropriate because, you know, instead of just jumping into the mechanics and technicalities of our specific topic tonight, at the end of the day, you're a person, you're an incredible person. So how about if we just rewind the hands of time a little bit and just tell us a little bit of your backstory before you got into, you know, starting your own business and doing what you're doing today?
Yeah, well, I'm a serial sales gal. I love sales. I'm obsessed with it. I love teaching it because most business owners hate it. It's usually the piece of our business that people cringe over. And it's usually because we think of, you know, the typical salesperson. I don't want to be like that. I don't want to be, you know, pushy, aggressive, all those things. And I felt the same way growing up in my sales career. And so I found a way to sell and climb to the top of every industry that I was in, but do it in a way that felt good to me. So I'm passionate about sales. I've been in it now for 18 years and built a pretty big career in the corporate space. You know, I had these big goals. I want to become VP of sales, you know, before I'm 30. And I did that. Had a sales team of about 600 people, sales directors, the whole thing. It was chaos. I was traveling 23 days a month. You know, I've heard a quote before that says, sometimes you reach the top of the mountain and you don't like the view. I thought that was it, right? Like once I got there, I'd be happy. And I got there and I was just kind of felt empty. So I left. I felt like there's more for me to do. There's another arena for me to conquer. And so I quit at the peak of my career. People thought I was absolutely nuts. Went out, started my own sales coaching firm, got into commercial real estate at that time with my dad, who's been a professional trader my whole life, Forex futures options, all the financial markets. He's like, we're getting into real estate. I need your help, right? I need you to raise money. I've been raising money since 2014. Even in the midst of my corporate career, I was still raising private capital. So we started doing commercial real estate and here I am. People found out that I know sales and I know how to raise money. And I think people really resonate with the idea that you can do it and not feel gross about it, like have really good results without having to do all the cringy sales tactics that unfortunately a lot of people teach in the sales industry. So I started teaching capital raising in 2017. And I am, like you mentioned, Trevor, I'm big in agriculture. So a lot of people don't realize Texas has a really big wine industry, $20 billion industry. And so we are the largest operator in the state. We're blessed to have 1,100 acres of just beautiful vineyards. We grow wine grapes, we sell them to Texas wineries, and we syndicate those. We raise capital for that. So I've raised money for the financial markets, for multifamily projects, for vineyards, and I am closing out this week a $23.5 million raise for a fintech company. So I eat my own dog food, as they say, or I drink my own Kool-Aid. I never tell people to do something that I'm not doing myself. I'm in the trenches with you. So I actively raise capital as well.
Outstanding. I love that. And you mentioned real estate, Keeley. I mean, you crushed it in the professional world, and then you injected real estate in there. And what was it? Your dad that really opened the door into the commercial real estate space, or how did that get on your radar?
It was my dad. Yeah. Cause I followed him. My dad's a serial entrepreneur. He's been a business owner since I was a kid. He's always told me, follow the money, don't get attached to one particular industry, asset class. We follow the money. And for years, I raised money for a hedge fund partner that was not my dad, but I knew the financial markets very well. And I raised separately for that. And my dad, had his own small kind of money management firm. And it was interesting because all of our clients or his clients that were in there, and even my clients as well that were in, this hedge fund partnership, it was like, we're moving into real estate. And we had said for so long, like, we trade the markets because we have liquidity. Real estate's not liquid. And then all of a sudden we're like, we're moving to real estate. All of our investors are like, you've always said it's not liquid. We're like, we know, but the money's over here and we got to follow the money. So yes, it was my dad that pulled me into commercial real estate. And I'm so grateful for that. He's my partner in the vineyards with another family. There's another diehard Texan family, but yeah, that's how I got into commercial real estate.
Okay. I love that. I love that. Keeley, you've been a winner, it seems like, all of your life in anything that you've ever done. But I understand at the same time, you've gone through quite an evolution and a development as far as just the Keeley that we see here on the screen and that is spending time with us tonight versus maybe the Keeley of 10, 15 years ago, something like that. So could you just speak a little bit about your transformational journey from maybe a mindset, professional, personal development standpoint that has led you to be the person you are today?
Yeah, that's such a good question. And yeah, I'm so proud of who I am today, and I'm still growing, right? Like, I still, I'm trying to act today as the woman that I see myself being 5 years from now. And I think that mindset is what always propelled me, right? Showing up today as the woman that I see myself in 5 years. What would she do today? What are the decisions she would make? What are the phone calls she would make? What are the things that she would demand from not just herself? What are the standards she would set for the people that she works with and, and for herself? I really fell on my face when I left corporate, and I understand what my dad has told me for so many years. He's been a business owner my whole life, so he's had his ups and downs. He's seen all the market cycles. He went bankrupt when he was 44, 45, millionaire when he was in his 20s.
Wow.
Bankrupt at 44, 45 years old. One of his companies just, perfect storm, imploded, and 4 young kids, like, lost everything. And he's always told me, he was like, I'll never partner with somebody in business who's never lost it all, because I don't know how they're going to act when their back's against the wall, because that's really where
Wow.
character and integrity. And there's a lot of people that told him, don't file bankruptcy, save yourself. And my dad's just, that's not who he is. He was like, I'm going to do the right thing, even if it costs us everything. And so I understand what he's talking about now, because I learned so much about myself when I went through a big business, blow up. And when I left corporate, I started in business with a partner. This was not in the private capital space. This was an education business. And looking back on it, I was hiding. That's why I did it. So everything in me was like, go start your own sales coaching firm. But then I got tempted by this opportunity of, hey, be my right hand, be my number 2, help me build this business. And I did, behind the scenes, for about a year. I had partnerships with E-Trade. It was like, I had $8 million in credit card agreements. Like, day one company launches, $8 million in revenue comes in. Had all that done. The partnership blew up overnight and just completely dissolved. Left me in a ton of debt. I'd quit my corporate job. I taken on $160,000 in debt. I'd ran through all my savings, made a lot of mistakes, right? Looking back, I'm like, I shouldn't have done that. And I remember that feeling of like, oh my God, am I not cut out for business? Like, is this not for me? And I know a lot of y'all that are listening are probably transitioning out of your W-2 or thinking about it, or maybe you've already been there before. And it's different. Like, when you're in business for yourself, you're in the arena every single day. And I remember thinking, like, should I just go hire a headhunter? I knew I could go get another VP of sales job. I could get a cushy, multiple 6-figure salary and I'd be fine. But there was something in me that said that felt like quitting, and it felt like resignation, and it felt like there's so much more in me that I have to give. And so I think that's what I'm most proud of, is like picking my sword back up, getting back in the arena, and really proving to myself I can do this on my own without hitching my wagon to somebody else and letting them shine. Because I really feel like God was calling me, no, I gave you this gift. I want you to put yourself out there and you deal with all the head trash of imposter syndrome. Am I going to be enough? Will I be able to do this? Is anybody going to listen? Like, does anybody care that I teach sales training? And so it's been such a journey of figuring out what I'm really capable of on the inside and all the scary moments that you push through. I think that's what I'm the most proud of. But yeah, and we're all like growing, right? I'm a work in progress. I'm not there yet. I don't think the journey ever ends, but I think that's the best part about being a business owner is who you become in the process is the best part.
Keeley, do you think you had an edge because you're an extrovert? So I'm indirectly asking you to speak to the introverts in the room who are trying to raise capital.
Yes, yes.
I love that, Iffy. You know, I'm an extrovert when I teach sales, when I'm networking, but if you were to talk to my family, they're like, I'm a woman of few words. Like, I'm fine just sitting silent. Like, if I'm networking events are my worst nightmare. I'm going to, if y'all are going to Limitless, I'll be there, you know, this whatever. And it's a conference and Ken McElroy's conference here in Dallas. I hate it. I really do. Like, and it's not about people. I love people, but I'm fine sitting in the corner with a glass of scotch just by myself, right? On my phone. And people are like, oh my God, look at that poor girl. She didn't have any friends. I'm happy. Like, I'm totally fine. But my coach told me a long time ago, if you don't talk about your business, you won't have a business. So I have to push myself to go to networking events. And when I'm there to, you know, to work the room, I've never been that girl that's like, you know, meets everybody in the room and is the life of the party. I'm really good at sales, but I do kind of feel like I'm an introverted extrovert, if you will. So if that's you, yes, you, Iffy, and I'm sure there's some others in here, have confidence. You can be very successful in this, but you do have to deal with people, right? We got to talk about our business. So I think it's going into these events with a target, right? I'm just looking for 3 meaningful conversations that I can turn into coffee meetings the following week. Start filling up your calendar with coffee meetings, lunch meetings. I don't go into these events trying to pitch people. I'm just looking for a meaningful conversation that I can fill up my calendar the following week with people that, you know, could be potential investors, could connect me to speaking gigs, like people of influence. And so that makes it easier to gamify stuff. But I'm not trying to meet everybody in the room because it's not my personality. So hopefully it gives you some hope, Iffy.
Yeah. No, I think a lot of us can. Yeah, I think a lot of us can relate to that, Keeley. I feel like you were defining my avatar as well. You know, it's like on the one hand, people are amazing. I love it. If you see me in an event, you know, you think, oh man, this guy might be the most outgoing dude ever. But actually, like, I really enjoy my chill time and being alone as well. And my family can testify to that. So yeah, I guess dovetailing from that, as far as, you know, in the Freedom Chasers community, we really help people. We want to lay the foundation for a multifamily real estate education. And then we also want to help people, you know, build on top of that by finding their specific niche in the multifamily space to really break in and gain traction. Mm-hmm. And for you specifically, I mean, you found yourself in the space of raising capital. So what was the evaluation for you to say, hey, this is where I'm going to really double down and develop my skill set as far as raising capital is concerned? And what could you speak to the audience as far as if they are going through this evaluation process? What would make sense for them as far as if they wanted to go down the route of being a capital raiser?
Yeah, I knew what I bring to the table. Like, I know my strengths so well. And I also know that underwriting like makes me want to pull out my eyelashes, like one by one. I just sit there and I start going cross-eyed and I'm like, oh, I start going through my to-do list and then songs start playing in my head. I cannot focus like with numbers. I can do it if I need to. I always say, like, I can't do math, but I know how to count money, right? So if I'm like counting money, that's fun. Yeah. But like the actual like underwriting and all the, God bless all of y'all that have that strength. It's not mine. So I knew, like, I'm not going to try to force myself into underwriting. I'm good at sales. Let me be the relationship person. Let me build these relationships, build the investor community, be the go-to. My dad is great at numbers. So I think it's finding your counterpart, even if it's not in your family, right? Find a partner that's really good at that. And also at the same time, I multiple times have turned people away that have asked me for coaching that want to learn how to raise capital. And I've spent, 30 to 40 minutes with them. And I'm like, they're going to hate it. They're absolutely going to hate it. It's not their skill set. They're going to suck at it because they don't want to do it. It's not because they can't learn it. Anybody can learn it. Like literally anybody can learn sales. Nobody comes out of the womb with, rock star salesperson on their forehead. It is a learned skill, but are you going to show up to it with the same energy that you would numbers and spreadsheets. Or when it's time to pick up the phone and call investors, you're going to make an excuse of like, oh, I should probably check the numbers again, right? And then you dive into the spreadsheets instead of making the phone calls because that's your comfort zone. So I'm a big believer in stop trying to improve your weaknesses, leverage your strengths and what, the talents God has given you, and partner with people that can do the things that you're not as great at.
Okay. So I guess maybe the better question is, how do you know somebody's not a capital raiser or shouldn't go down that route of the role within a multifamily team?
I look at their background. What do they do, for a living before they got into real estate? And I ask the question, do people drain them or energize them? Because if people drain you,
that's good. That's good.
Right? And you're an introvert and you spend a lot of time with people and you've got to like decompress and not talk to anybody for a couple of days. I don't know if capital raising is the best thing for you. My dad can be a people person, but he like not as often as he would need to be successful at it. Like he doesn't want to deal with people. He just, sometimes I'm asking him for information and I'm like, I got to write an update, Dad. And he's like, just tell him we're doing what we're doing. And I'm like, that doesn't work. I need more than that, Dad. And I love my dad. And if you've met him, you understand, like, he's an operator. And so he's not as good with people. But I think if people drain you and you're always drawn to, like, what energizes you is the idea of like figuring out in the spreadsheet how to tweak your business plan based on returns and all the models that you can build. And like, you love that, that's your wheelhouse. Versus if you like to hunt and you love the idea of starting at zero every single time you start a raise and figuring out how to climb your way to that, whatever the number is, $5, $6, $7 million, for example. And it's the thrill of the hunt and not knowing where the money's going to come from, but you love the idea of finding it, then you'd probably be pretty good at capital raising. And people don't drain you, they energize you. Even if you're one of those introverted extrovert combos. I tried to force myself to believe that I was this dolphin personality. So I teach DISC a lot in sales. I've taught it since I was in corporate. We tested and did assessments for everybody. It's DISC. It's personality profiling. It's 4 personality types. And the one that you would think is really good in sales, which most salespeople are, is called the influencer. And they're an extrovert and they're super people focused when they communicate. They're that person that like lights up the room. Everybody knows them. They're the life of the party. They could walk into a room full of 100 people and walk out with 100 friends. And so I always thought to be successful in sales, I had to be that person. And what I learned is that I am extroverted, but I'm more task focused when I communicate. I'm very direct and to the point, which can be, helpful in leveraging your strengths. But I kept trying to think I was supposed to be something that I'm not. And so that's what I would tell you is don't force yourself into a box because you see all these, capital raising, excitement, like, oh, I want to be that person. It looks like a lot of fun. It's hard. And I'm going to tell you the truth, tell you the stuff that nobody else wants to tell you, because to sell capital raising coaching, I'd be like, oh, it's so easy. Anybody can do it. It's a ton of fun. It is fun. It is hard. It's challenging to raise capital. And so if you don't have that in your gut of like, I love working with people and I love the hunt, I don't know if you're going to be successful with it long-term, because you're going to find yourself doing other things, working on underwriting, like finding excuses and reasons to not talk to people. I don't know if I even answered your question, Trevor. You know me, I go off on little rabbit trails.
Yeah, you did.
Okay.
Yeah, very good. Thank you.
There's a lot of mindset resets that has to go, breaking down faulty paradigms that has to go into the capital raising business.
Yes.
Can I do this? And even when you successfully, I'm sure when you successfully raised your first $1 million and then you had to raise 5 million, you had to, I'm sure there were some hurdles you had to go through mentally to get there. And then you just said you did 25 million. Walk us through what that looked like.
So I was nervous about this most recent raise, like really nervous, because when it started, it was like, oh, we need you to raise 7 million. I was like, we can do that, right? Me and one of my business partners. And then it grew to 11 million. And then it was 13 million. And then it just kept growing. And it's truly the opportunity of a lifetime. And so what I've learned is the stuff that scares you, say yes, you will figure out the how. If you are 100% committed to, I always win, I always find a way to win, come hell or high water, I will get this thing across the finish line, and you have 100% conviction that you will do it, you will figure out the how. The how works itself out, and it has. And to be very blunt with you, I didn't know if I could do it when I said yes. But I said yes, because that's what's grown my career, right? In corporate. I don't know if the sales system that I learned in the trenches, they wanted me to teach it to the entire company. I was like, I don't know if it's going to work for everybody else, right? That was kind of my entry into corporate to start building a career. But I said yes. And we took the company from 40 million to 220 million a year in revenue. I didn't know if I could be a VP of sales. I'd never hired sales directors. Everybody was older than me, right? I was in my late 20s. All the senior executive team were in their 50s and 60s. Everybody that worked for me was older than me, but I said, yes. I'm like, I'll figure out the how. I can do this. And it's like all these little arenas that you conquer give you confidence to do the bigger things, but you'll never be able to do the bigger stuff unless you say yes to the things that scare you and stretch you. So I think that's been a huge lesson that I've learned, to say yes. The how works itself out. You figure it out, but you got to say yes to the scary things first. And I'm just being transparent with y'all. I was very scared when I started this. I'm literally at the finish line this week. And I'm like, by the grace of God, we're here. Truly, whatever you believe in, it's not just, we don't get to a place in business of success on our own. Whether you believe in God, the universe, whatever it is, there is a higher power that is guiding us. I did not do this on my own. And if you don't recognize that and realize that, business is going to be very tough, but we have to put in the work, right? We have to do the things that are scary. We have to share our talents with the world. We can't hide and cower, and because we're afraid when there's people out there that we could really help. So say yes to the things that scare the hell out of you. The ones that give you that feeling in your gut, right? Where you're nervous, like somebody asks you to speak on stage to like thousands of people. You're like, oh, I've never done that before. And you already have the same butterflies that you would get right before you walk out on stage, and you're just thinking about it. That's how you know you're supposed to say yes to it. It's those moments that give you the growth.
That's good. That's really good. Keeley, I want to pack a little bit of your recent capital raise experience. So just so I understand, you are on the final stretch here of finishing a $25 million raise in a very interesting time that we find ourselves in. There's a lot of variables out there that are contributing to quite a volatile situation out there in the market and other just areas of the world. So I'm curious, as far as this raise specifically, you are executing it successfully, but were there any fundamental differences because of the environment that we find ourselves in for this raise compared to a raise that you've contributed to, a year or 2 or 3 or 4 years ago?
Definitely. A couple of things. So I think from the very beginning, and I have a whole list of affirmations that, and just when I say affirmations, before y'all are like, oh my gosh, here she goes with the woo-woo stuff.
She's getting woo-woo on us, y'all. Get ready.
Woo. I never believed in that stuff. Like I was like, whatever, positive thinking, right? But I really learned, like, we speak our reality into existence. Like the words that come out of our mouth matter. Like, who do I have to show up as today to be successful? Because if I don't believe that I'm that person that can raise $25 million, I have no chance in hell of actually getting there. I'm not going to execute and do the things that are required to get this thing across the finish line unless I show up and look at myself in the mirror of, I am that person that people can rely on to raise that type of capital. So I think it was, regardless of what's happening in the economy, I believe there is so much money sitting on the sideline that is ready to pour into this deal. And I have to believe that first. And I really learned that. I was at a sales conference back in like 2010, and they brought somebody on stage that like 10x'd his business in the midst of the 2008, 2009 market crash. And they were like, how did you do this? And he said, well, I know we've got, a 30-minute interview, but I can literally summarize it in one sentence. And he said, I simply refused to believe that we were in a recession. Wow. I refused to believe it. I refused to let my sales teams believe it. So I went into this race thinking, I don't care what's going on in the economy. There is so much money on the sidelines. There is so much capital that is going to flow into this because investors are looking for something different. So it was that belief system up front. The second thing is I talked a lot about risk. And I think a lot of people avoid that part of the conversation. Like, oh, let's just we did the disclaimer up front so they understand the risk. Like, we're afraid to really talk about what are the risks in this opportunity and really define them. People avoid that because they think it's going to dissuade investors from moving money. People are looking for somewhere to put their money. So they're going to trust you more if you're willing to go through, here's, 1, 2, 3, 4, here's all the risk. And here's worst case scenario. Here's how we plan to mitigate that. Here's all the different things that could happen and how this thing could play out. Investors are not dumb. They understand risk. They understand risk. They put money in the stock market. So I think it's important that we talk about that. I went through the risk of a market crash, like a 2008 market meltdown. Yeah, that would be horrible. Black swan events, World War, not great for this type of investment. I went through, regulatory risk, things that were specific to this investment, and without like shying away from it. So investors could actually make a decision of how much money they want to put at risk. And so I think that's really important, is bringing that up front and not thinking that it's going to dissuade people from actually moving money.
So did you find, Keeley, that investors were a little bit more hesitant to invest in this type of deal, or just invest in, I would say, quote, quote, alternative assets at this point in time, compared to past years?
At first I thought, oh, it's because this is like, it's out of the box, right? It's tech. Tech is sexy. People are like, oh, I'd love to invest in a startup. But then I realized like people are moving money into the vineyard projects right now too, because we're raising money for vineyards. So I think a lot of it is our own head trash that I'm guilty of too, where we think like, oh, people are nervous because of the election, because of where things are at in the economy. But I will tell you, like, accredited investors are moving money. Like some of my biggest investors that I kind of use as like a temperature check on the market of where they're at, they're moving big money right now because they want to put it somewhere. It's not going to do as well in the bank as interest rates start lowering. So they're looking for somewhere to move their capital. So I think it's assuming that people want to move money into alternative assets, walking them through the risk. And especially when you talk about deals, what I've noticed and everybody does this, doesn't matter the industry. We tend to say, here's why I love this opportunity, or here's why we think this is a great investment opportunity. I would encourage you to do it third party, because anytime you say that, somebody's like, you're just telling me that because you just want me to put money in this deal. So instead, I would say, here's why investors love this type of an opportunity, especially in this market. And talk about, the volatility of the markets, election year, the interest rate environment. Here's why investors love putting money into vineyards as a safe haven, development project, because we're hedged for the next 3 to 4 years. Doesn't matter how things play out. We're just building the vineyard. So if you find a way to tell the story of why it's a great place for investors to move capital, and remember too, that it's just a portion of their portfolio. So for the vineyards, when I raise for that, I'm not trying to tell them like, oh, put your money in vineyards and not multifamily. I want them in all these other asset classes. And I want to be the go-to person. When they say I want to put money into oil and gas, I want to connect them to an operator, because I've preached to them alternative assets. So the vineyards are for the portion of your portfolio that you're looking for cash flow for decades. That's what investors are telling me. Keeley, I want cash flow for decades. So think of this opportunity to fit that puzzle piece of your portfolio that's looking for cash flow. So we're not trying to convince them, move all your money out of stocks, put it all in multifamily. Just find a way to tell the story where it's for that portion of their portfolio.
That's good. I really like that. Iffy, did you want to fire a question away out there?
Yeah, I wanted to talk a little bit about what's vetting investors. I don't know if that's the right way to say it, but yeah, vetting investors.
Yes.
Or qualifying. That's what it is. Qualifying investors.
Yeah. I mean, I feel like it's the same thing, right?
Yeah.
Qualifying and vetting. I was smiling because I just was having a conversation. So I've got a couple fund managers that have helped me get this thing across the finish line. And I just texted one of them that said, right, no go. I don't care if they want to put $250,000 in, not a good fit. So if y'all have ever heard that phrase, some money is too expensive, I think if you've raised money long enough, you can think of an investor that just was not the right fit for the project. And you're like, I would give the money back if I could, because this is like, it drains the energy from the project. And every time you get an email from them or a phone call from them, it just sucks the wind out of your sails for the rest of the day. Mm-hmm. So I would encourage y'all to realize that you have the ability and the right and the abundance mindset that you don't need everybody's capital just because they can wire you funds. They need to be the right fit for your investment. So qualifying and vetting, I'd say, are in the same category, but vetting is, are we like culturally a good fit? So I would encourage y'all to think through 2 to 3 characteristics of what you value and what you look for in your investor community. And I have that conversation with people up front. And I say, Iffy, I'll probably be the first to tell you what we do isn't perfect for everybody. Like we love, vineyards, we love Texas, but these investments aren't perfect for everybody. And there's some specific characteristics of what we look for in investors that would be a good fit for these types of projects and for our investor community. I'd be happy to share those with you as we, continue to have this conversation. But are you okay if I ask you a bunch of questions just to better understand your world, and we can figure out together if it makes sense for us to have future conversations about investing in Texas vineyards? They always say yes, but you're teeing it up from the beginning. This may not be the right fit. One of my characteristics, y'all are going to laugh, is they have to have fun. Like I literally tell them, what? So I talk about risk, right? Like you've got a risk, you understand farming. We could have a massive harvest one year, and then we could come in 10% below pro forma the next, and then we're 15% above the next year. Like farming is up and down. Do you understand that? Walk me through other investments that you've been in where you understand risk. And they're telling me, right? They're proving to me that they understand, because I don't want to deal with that. I don't want to deal with an investor freaking out because we're 10% below pro forma in our harvest that year because weather's involved. And then the next year we have a big harvest. I don't want to deal with the emotional roller coaster. So I'm going to have that conversation up front. The other thing that I tell them, and it's the last one I talk about, is we don't really allow any crankies. We call them crankies, right? No jerks allowed. And you don't seem like that to me, right? I don't really say that to somebody. We want to have fun. We're going to meet your kids, your grandkids. Like we're going to be together for 30, 40 years. We want to really have investors in this that understand like the vision we're building and love the project and want to have a good time, like while they're investing. That's really important to us. So pick 2 to 3 characteristics of what you look for and hold true to your standards. Don't just let somebody in because they can write you a check. If you've raised capital for long enough, you know that can bite you in the butt later on. So qualifying. Oh, let me pause. Did y'all say something?
Oh, no, that was me agreeing with you.
Okay. Qualifying is looking for investors. So before you present your opportunity, well, let me back up. Traditional sales teaches that you need to be really outgoing and friendly and have a bubbly personality, which that's not me, right? Like I always thought like, I got to be like, woo, razzle dazzle and hey, and nice to meet you and all that. That terrifies investors, right? Nothing's more terrifying than a really excited operator that's like so excited to tell you about their opportunity. That terrifies them. So we got to be calm, cool, collected. But traditional sales teach you to be outgoing, friendly, know your product or service really well. In our world, our product is multifamily investing or whatever other things you're raising money for, and be really helpful and answer all their questions. And then follow up incessantly, right? Until they like tell you to go away forever. We keep following up. And I found that that's a very exhausting way to sell, because that was taught to me in other industries and young in my sales career. So what I would rather y'all do is look at it from the perspective of people have to earn the right to hear you tell them about your investing opportunity. They got to earn the right to hear about vineyards. Good. They can't just start blasting me with what's the returns, what's your risk mitigation plan, how does it cash flow? Like these are all great questions, and I'm happy to get to that, right? But first, we got to figure out if you even have the problems that we fix. So when we qualify, the first thing I'm looking for is a compelling reason. If we don't have a compelling reason is a pain point. No pain, no sale. I've been teaching that my whole life since I've been teaching sales across different industries. The compelling reason is why your investment versus what they're already doing. If they're making 30% year over year in crypto, why are we trying to get them into multifamily if there's no pain point, right? Does it make more sense to find people that have the problems that you fix? And you hear salespeople that'll brag and they'll say, oh, I could sell ice to an Eskimo. I'm like, well, that's great, right? Really cool. I would rather, like if I'm selling slings, right, or casts, I'd rather find people that have broken arms if that's what I sell. So let me find people that are frustrated with their current investment portfolio. They're anxious about the stock market. They're nervous if they're going to have enough money for retirement. They're confused by all of the jargon and all of the investments that Wall Street sticks them into, right? This little perfectly created plan that's not panning out for them. I'm looking for those people. And if I can find a compelling reason that's strong enough of, yeah, if we don't do something different, we may not be on track for retirement. Or, a compelling reason would be their mother just has something that happened health-wise and needs long-term care. She doesn't have an insurance policy and they got to come out of pocket $6,000 a month. And they don't know where it's going to come from and start draining their retirement accounts. That is a compelling reason to start doing something different with their investment portfolios. We have to have that conversation first. If they have the compelling reason, then we're talking finances, right? How much money do they have? not just for one investment, but over the next 12 to 18 months. Where's it coming from? What types of accounts? When is it liquid? How do they make decisions? Who's all involved in the decision? How many of y'all have had some imaginary spouse that's come out of nowhere
Yep.
at you, and they're like, I can't invest because my husband said, or wife said, whatever, right? Like they're not on board with it. And you're like, husband or wife, I didn't know they were married. We don't want that to happen. We got to figure out, who are all the stakeholders that need to be involved in this decision, what's important to them, and how they make decisions about their money. I ask them that question. Trevor, you seem like a pretty seasoned investor and very careful in how you make your investment decisions. That's an ego stroke. Why? Everybody needs it. Doesn't matter who you're talking to. I'm curious, like, what's most important to you when you make decisions around giving investments a green light or a red light? Like, how do you evaluate it? I want to know that. And that's literally the verbatim what I ask them. And they will tell you what's important to them. It's going to be different for every investor. So if I have a compelling reason, I'm talking to somebody that's financially qualified. I know all the answers to that question. I know who's involved in the decision and how they make decisions. Then I'm happy to share with them how Vineyard investments work and why other investors are finding it helpful to include it in their portfolio, right? Multifamily in y'all's case. We have to qualify first. When you qualify hard, the close is easy. The close happens organically because of the process that's in place up front. They're not experiencing that. When they get on a Zoom call with another operator, and I'm not faulting anybody in the industry. Most people have never had formal sales training, or they've had faulty sales training. But when they get on a call with an operator, there's 5 to 7 minutes of small talk, and they're trying to find something in common, right? That's what we're taught in sales, is find something in common to build some rapport. And then they pull up their fancy schmancy slide deck and they just start pitching, and they talk at them for 20 minutes, and they get to the end like, do you have any questions? And they answer questions, and they're like, okay, I'm going to add you to our investor community. We have another deal coming up in the next 3 months. I'd love to send you an email on it. Let me plug you into all these educational resources. And then they check the box in their mind. I've got an investor in my community. And the problem is, when it comes time to actually raise the money, and there's 1,200 people on their email list, they have no clue how much money they can actually raise. And again, I'm not faulting the operator, the capital raiser for this. It's typical in our industry because nobody teaches qualifying. I want y'all to look at your list and know John Smith has $250,000 to invest over the next 18 months. He's looking to put at least $75,000 in the first deal. He wants something that's more of a cash flowing type asset. It's going to be an IRA fund. It's with, Quest. It'll take a couple of weeks to free up the capital. His wife needs to be involved in the decision. I want that type of clarity. So when you look at your list, you're like, okay, I'm confident I could raise $4 million on this deal. And it's not just a roll of the dice, because you deserve that, right? We work really hard. A lot of y'all have left your W-2s. We need clarity in our investor list so we know how much money we can actually raise, how many investors we can serve, and how we can take care of our families too.
Wow.
I went off a lot of trails there.
No, that was like a mini masterclass. Thank you. I've heard you say this before, but thank you so much for sharing that.
Yeah, and I would just encourage everybody on the call, is when the recording comes out of this Zoom, I want to encourage you guys, watch it again and take notes. I mean, Keeley, she's outlining a framework as far as how to engage investors in the most appropriate and effective way. And she's also, she's very nuanced in her language. I mean, it comes out second nature, so it's hard to maybe catch it at first. But I mean, we're talking about almost 20 years of sales experience where she's saying words specifically and in a specific order so that it lands in the right spot in engaging an investor. And so again, I would encourage you guys, I've done this myself in past Zooms with Keeley. I would encourage you guys to do it, rewatch it, take notes on the framework, and take notes on her specific language that she's using and how she phrases questions or responses that would be applicable to engaging your investors. Keeley, I want to take, maybe we got about 5 or 8 minutes, something like that, before we turn it over to Q&A with our audience. I want to spend the last, awesome. Thank you, Ashley.
Sorry, I talk fast too. That's another challenge.
Yeah, you gotta maybe reduce the Zoom speed. You actually load it up on YouTube, right? Do the 0.75 or whatever it is, or maybe even the 0.5. But I want to spend the last few minutes, Keeley, understanding on a pretty detailed level on raising money from friends and family and personal relationships. From what I understand from personal experience and talking with other people, that's where most will start when it comes to their first or second or third, or or maybe even many capital raises. I know a gentleman out there that was successful for 7 years just raising money from personal relationships. So if you could unpack a little bit and speak to And what does the process look like to successfully raise from friends and family? And let's break it up like this: before you have a deal, and then when you actually start raising for a deal.
Yes.
Does that sound okay?
Yeah, I love that. Permission to be blunt, because I'm not going to sugarcoat things. Can I be blunt about
Of
this
course.
topic? Okay. So I am, people know me for telling you the things you don't want to hear, but I'd rather you go into this eyes wide open versus having a challenge raising from friends and family and then thinking something's wrong with you. Because when we we look at social media, everybody's like, I raised, $40 million in 24 hours. And you're like,
That's
what's wrong with me? Why are these people calling me back? They're supposed to be my friends and family. So I don't want y'all to feel like something's wrong with you, because all we see is the highlight reel on social media. So friends and family are a crapshoot. Like, it could go one way or the other. And I've seen that not just for myself, but for all of my clients as well. I've had a client that raised, $900,000 from their friends and family. I have had others that have had complete crickets, like nobody's even responding. So I think it depends on your investor list. When we started, I was climbing, what do they call it? What are all these sayings? Trying to push a wet noodle up a hill. If y'all have ever heard that? Maybe that's a weird Texas thing. That was my first
I
raise.
haven't heard the wet noodle one, Keeley. I've heard trying to push water uphill. I've heard that one.
Wet noodle, right? So imagine that, right? That was my first raise in commercial real estate. Why? Because I created this massive hurdle for myself, telling all of our investors, like, oh, we're not in real estate because it's not liquid. We trade the markets. So we teach our investors how they should think about money and investing and where they should, place their funds. So don't create a barrier for yourself like I did that you're going to have to then try to climb over. And we're still just now getting some of those people many years later starting to invest in the alternative asset space. So I want you to talk to your investors about the power of alternative assets and the importance of diversification outside of not just stock market diversification, but real diversification in multiple asset classes, and be that go-to person for when they want to get into one of those asset classes, they call you. I don't raise money for oil and gas, but my investors, I had one that called me about a month ago. His name's Chris. Keeley, I want to get into oil and gas. Can you make some introductions for me? I want to be that person. I add a lot of value to his life by making introductions for him to people that I trust. So be that go-to person, talk about the alternative asset space. With that being said, you need to talk about it till you're blue in the face before you get a deal. Your friends and family network need to understand what you're doing and why you're doing it, versus get a deal and now let's go to them and say, hey, there's an investment opportunity. So the best way to share that is to talk through your own story of why you got into multifamily. What most people do is they talk about the tax advantages, the cash on cash returns, the equity multiple, the stability of just real estate in general. And it doesn't land with people because that's not on their radar. What's on their radar is the stock market going to crash this year? Depending on who gets elected in office, what's going to happen to my retirement accounts? Inflation, why are groceries so expensive? Why is gas so high? Why am I seeing, one opinion on this news network and the opposite on the other, and I don't know where to turn or what to do with my investments? How does my 401k work? That's confusing. You have to tell your story from a place of pain, right? I looked at my retirement, whatever your aha moment was. I looked at my retirement portfolio. So mine, right in the corporate world, was I made really good money. I didn't make the best investment decisions. I convinced myself that I didn't have the time to deal with it because I was building somebody else's empire and I was on this, climb the corporate ladder track, until one day I realized, okay, I'm starting to get, up there in the years. If I don't do something different, not married, single income household, high risk, if something happens to me, who's going to pay the bills? Like, who's going to take care of my lifestyle unless I start making different investment decisions? And I remember looking through mutual funds, the 401k and the IRAs, and I got frustrated and overwhelmed because nobody had ever explained it to me. And I thought, you know what? I don't think this is going to get me to where I need to go. And so I started thinking, I got to do something different. And I started looking into real estate, alternative assets. Where are the wealthy putting their money? I started educating myself, reading books. And after years of research, this is what I found. And this is why I started this company, because I'm so passionate about giving you the alternatives that you deserve that nobody taught you about. And there's incredible ways to have financial peace of mind about your retirement portfolio and not be confused by the statements that are coming in. But it just takes the courage to get started. And so that's what this webinar is all about, right? If you were like saying, come to this webinar on Wednesday night and you're telling your friends and family your story. I would also encourage you to do it through video. Everybody hates video. Even when I tell myself, like, I'm doing my own emails, I'm like, Keeley, if you were coaching yourself, you'd say do video. And then I'm like, oh, I don't want to do video. It's easy to write an email. And it is. But the story is so much more engaging if you just look at the camera and talk to them like you're just having a conversation with your friends. So I think how you tell the story is so important from a place of pain. What were you frustrated with? What were you tired of? What was keeping you up at night? What were you nervous about? All of those things came together and, created a something has to change moment. And after X number of months or years of research, this is what I found. And this is why I'm so passionate about this company that I've started. So tell it from a place of pain, and don't put a ton of pressure on yourself that if these people don't invest, that it's something wrong with you. There's nothing wrong with you. There's weird dynamics with friends and family. One of my sales directors that worked for me in corporate invested in this company that I'm raising money for back in September. And he's like, I want to bring my friends and family in. I said, okay, awesome, right? Wants to come in as a fund manager, never raised money before. He was so frustrated because and he raised like 2.5 million, I think. 2.5, I think he's at 2.5. He's had another 200,000 come in. His brother did not invest. His best friend, his childhood best friend did not invest. His fraternity brother did not invest. And it's all of these second and third relationships that are putting money into the deal. So if you're going to start raising from friends and family, let go of the outcome, have zero expectations. It's not a reflection on you. They don't think that you're stupid. They're not judging what you're doing. Just people have their own issues. There's weird relationship dynamics, and start talking to as many strangers as possible in addition to your friends and family network. Hopefully that is probably not what people want to hear, but hopefully it'll give you a better idea going into it, so you don't think something's wrong if you do have, a very low response versus a very high one. We don't know what's going to happen. It's different for everybody.
That's good.
Yeah, no, I think that's great. So there's not a rude awakening. I know you said that was the last question, Trevor. Can I ask just one more? One more. I wrote.
Of course.
What, Keeley, tell us about maybe one of the more common objections that investors bring and how we can overcome them. Just one.
Yeah, I think, right now, let me back up. If you qualify hard, you're not going to get the objections because so the way that I've always taught it is dig up the landmines, diffuse the bomb before it blows up your deal. So that's what the qualifying process is. Typically it's a spouse that blows it up. It is, they say they're interested in what you're doing, but you didn't know that they're also vetting these 3 other asset classes, and they put their money into self-storage and you had no idea, right? So that's the whole purpose of the qualifying process. We're going on this scavenger hunt to find all the landmines that could blow up our deal. We're digging them up. We're having a conversation about it, and we're diffusing the bomb. So we get a clear yes or no. But I would say in this economy right now, it's investors, elections. And I'm not politics. It's just everybody's like, well, where are things going next year? It doesn't matter. We still got to move money. So I think if we're going to say that, whether it's in emails, it's in our investor webinars, like if I'm doing a webinar on the vineyards, if I were to start a raise right now, I would say that, it's a wild ride because of election year, but here's why we're in a great position just from an interest rate perspective. Regardless of who goes into office, investors are realizing they still got to move their money somewhere. And so this is a long-term play that's going to cash flow for many years versus me saying, regardless of what happens in elections, you still have to put your money into something. So this is why you should put your money into the vineyards. Do y'all see the difference versus investors? A lot of my investors that I've talked to that understand the economy that we're in, election year is always a wild ride. They realize that they've still got to put their funds somewhere. And here's why they like this opportunity. And it relates to the interest rate environment and where things are at from a development perspective. So let me walk you through our plan for interest rates going into the next 2 years. So it's getting ahead of it. In your webinars, in your conversations, in your emails, you're priming your investor community through your emails and the words that you say when you start a presentation. It's not just about the numbers of the deal. Get ahead of the objections they might have.
Thank you so much.
You bet.
Solid, Keeley, solid. Whippy, what do you say we turn it over to our incredible audience here that's hanging out with us this Monday? And Keeley, can we take some Q&A? Is that all right if we do that?
Yeah, absolutely.
All right, awesome. All right, so we'll take about maybe 5-ish minutes or so for Q&A, and we want to honor everybody's time. We really like to stop around the 7:15 Mountain Time, since that's where I am. But there's a little bit of flexibility there, but let's try to keep time as best as we can. So if you want to ask a question to Miss Keeley Hubbard, raise your hand. We'll get you unmuted, and you can fire your question away. So who's going to be the first one?
Someone did ask in the chat if Keely, if you are still offering a coaching program. I was going to answer on your behalf, but
Yes, I am. Just get on my email list. I'm doing a masterclass coming up in a few weeks. So that's like a freebie, and then it rolls into the coaching program. But it'll give you a taste of what I teach, how I teach, and then you can figure out if you want to hang out with me for the next 9 to 10 months.
there you go.
That's excellent. And before we get Catherine up here, Keely, could you just, and I know Iffy has been dropping your links in the chat, but if people want to plug in, know what you're doing, connect with you, what would you recommend, how they do that?
LinkedIn. I'm on
Okay.
LinkedIn. Is perfect. Yeah. And then there's, if you want on my email list, it's just my website.com/free. And it's a newsletter that I send out every week.
Okay. Outstanding. Thank you. All right, Catherine. Glad you're here tonight.
Hey y'all, how's it going? Thank you so much for answering questions and hosting tonight and being on. So last week there was a multifamily deal that I was interested in for myself, and long conversation got into would you like help with raising for this? And that's something that I'm interested in, and this is not time sensitive, and it's not something that they have to have, and could be a good foray where there's not a lot of pressure on getting the funds in a certain time. And I spoke to someone, I followed up today with someone, and they said, you know, what interested me was the rate of return. And now my feeling is, should I be worried that you're offering a good rate of return? And is that a red flag? And like, why isn't there funding coming from somewhere else at a lower rate of return? And why wasn't this, you know, like all these questions about like, oh, if you're offering double-digit returns, why? Does that mean something's wrong? And is that actually a red flag? So I was like, oh, should we offer less? Is that going to raise red flags for other people? It was thinking that was a good thing, that would get more cash or capital in faster if you offered a better return, like more people be interested. But is it actually going to work against us to do that?
Great question. I wouldn't change your underwriting model or your return pro forma just based on one person's opinion. But it sounds like
But
they
are
don't
other people
understand.
thinking that and not saying it, I guess, is where, yeah, my concern.
I don't know. I mean, I think if it's like, you know, astronomical returns, then maybe they're, you know, that's a question. People have the expectation that returns are lower right now. So it sounds like they don't understand the story. So you need to have a couple bullet points in there. If you've got like a tear sheet that you're sending out or an email or something that describes the deal on why you're able to offer these types of returns compared to other deals that they're seeing in the market right now. And I would also, what they're really asking is, did you miss something in the underwriting? Were you guys too aggressive on these 5 things? So whatever the underwriting numbers are, like maybe it's cap rate escalator or rent assumptions. So maybe you're very specific about, you know, what those assumptions are and why they are hedged or lower than what, you know, people, why they're hedged and you're still getting those good returns. That's their real question. Did you miss something in the underwriting? Because they're not seeing it anywhere else. So give them a little more exposure to your assumptions in your underwriting and why those are hedged. Because the returns are the returns, right? They're still great. And you just got a really great deal. Then explain to them why. I do think some language that triggers investors right now is that they got a deal at a discount, right? Like this deal was, you know, worth X amount 2 years ago. We're getting at a discount. Well, no, the market adjusted. So I think that's triggering some investors. So I would avoid language like that you're getting the deal at a big discount. I would focus more on your assumptions and your underwriting and looking forward, why you feel really good about those and why you still have hedges in place. And these 2 things don't have to work out and we still hit our returns.
Okay. Yeah, that makes a lot of sense. Yeah, thank you so much.
You bet. Great question.
Thank you, Catherine. All right, who's next in line to ask Miss Keely a question? Maybe we have time for 1, maybe 2 more questions.
Don't be shy. This is your opportunity. Every time you're given, Keely, I have to tell you something. Every time you're given an example of a pitch, I'm listening so intently I almost I feel like wiring you money. I'm like, yeah, I'm sold.
Right.
I'm like, yeah, I'm sold. I'll buy whatever you're selling.
I appreciate that. While y'all are thinking of other questions, I'll tell you that one thing that's been different about this particular raise that I've done is I need to go back and count probably more than 80 webinars at this point, same pitch, right? And there was some nights where I was doing it at 5:30 Central, 7, and then 8:30. And it was like I'd finish 5 minutes before, get some water, bathroom break, run back, and then start all over again. And what I've learned in that, and it was exhausting, but what I've learned is like you have to have the same energy as if you're pitching it for the first time, right? When you found that deal, you're so excited about it. You have to have people buy into your energy, the story of the project, like why this is such an incredible acquisition, what it took to get to this place. That's really what they're buying into, is your conviction about the opportunity. And we've got to present it every single time with that same conviction. And I also think that we need to do more webinars. The kind of the standard in our industry is we get a deal under contract, we're putting the deck together, we do a webinar, here's the recording. And it's hard to raise like that. I would encourage y'all to have more live events. So a second webinar, maybe it's a third one, maybe it's a Q&A. So you're giving people options that they can come to. Don't depend on your investors to watch a recording. Do y'all want to watch a recording of an investor webinar, right? Like, they're can get kind of boring. We're all busy. So why not give them a live opportunity to attend it multiple times?
Fair. Cool. Keeley, before we conclude tonight, and we'll still open it up for maybe one more question. I am getting an SOS text message about my kiddos in the house. So we probably need to wrap this thing up here pretty soon. But I want to make sure I capture a picture of our time here tonight and make sure we show you love and appreciation on the social media channel. So I definitely want to grab that before we conclude tonight. So I'm going to snap a photo here of us hanging out together. 1, 2, 3. All right. Outstanding. And I encourage you guys to do the same. I mean, Keeley takes time out of her evening. I mean, she's really been pushing on the final stretch of a huge raise. And here she is spending time with us. So encourage you guys to connect with her on the links that Iffy has been posting in the chat, and also show her love on the social media channels as well. So going once for the last question, going twice. 3, 2, 1. All right. Well, Keeley, maybe we just wrap up here tonight.
That's perfect. Thank y'all so much. This energizes me. I'd
you.
rather do this than my to-do list. So thank you for having me. Y'all are a ton of fun. I think that these things go as well as the host, obviously you, Iffy and Trevor, but also the people that attend it. So y'all are awesome. Thank you for having me.
Thank you so
Thank you
much.
as well. And if you guys are planning on attending the Limitless Conference, right, Keeley, that'll give you an opportunity to connect with Keeley in person. I'm still looking forward to the day, Keeley, where you and I can actually cross paths in person and not just over the phone and over Zoom. But I know someday we'll make that happen.
We will. We'll share stories about Texas. Maybe we'll get a tattoo.
There we go again.
Maybe we will. Maybe we will. Keeley, thank you so much again for spending time with the Freedom Chasers tonight. We're looking forward to the next time we get a chance to host you. We really appreciate you. Thank you so much.
Thank you.
Thank you.